Let's discuss the top stocks which are in focus today with Dipan Mehta. He's a director at Alexa Equities joining us on the show. Dipan, we have been talking about the entire electronics manufacturing space and how all of those stocks are on fire today. Kaynes, Amber, Dixon, etc. Do you have a favorite from this particular vertical? Anything that stands out to you?
Yeah, good afternoon and thank you for having me on your show. I think we track Dixon and Amber quite closely. And I think today stocks have gone up on account of numbers which came through from Amber, which were quite exceptional. And I think it clearly reflects that the heat that which we have been facing over the last 3, 4 months, that at least has got extrapolated into higher numbers for Amber. And I think Dixon is going up based on that sentiment only, because as such the commentary from Dixon and the last 2, 3 quarters have been quite disappointing and valuations also on the higher side. So I wouldn't like to invest in that stock at these levels. But Amber Industry, I think, really surprising set of numbers. And I think whatever expansion plans they have undertaken, those are playing out very well. They have certain new contracts as well, which have benefited the company. So this is really a surprising number. Last couple of quarters were impacted by higher raw material costs, but now I think that entire trend has reversed for them, and we've seen expansion of operating profit margins as well. Amber per se trades also at reasonable valuations, so maybe at these levels or slightly lower at a correction, it could make a good, interesting investing opportunity with the potential to outperform the broader indices.
Uh, Dipan, but one thing what we've seen about Amber and Dixon is that ultimately these are low margin businesses. Little bit here and there, top line is great, but the margins they get completely squeezed out. Isn't that the risk in buying these businesses?
That's right, Nikunj. But the potential for growth is so vast that the volumes, the way they are expanding, I think eventually they do get a lot of economies of scale as well. And on the whole, I think they are also pursuing this PLI, benefits or whatever opportunities are there over there. And that also is margin accretive. And yet the full impact of the investments made for PLI are not reflected for Dixon or for Amber for that matter. So yes, I know that the margins are on the lower side, but it's on a cost plus basis. So there could be a quarter or two where there's a mismatch where higher cost of inventory or higher cost of raw materials may have impacted the margins. But if you take a 3, 4, or 8 quarter kind of an average, then they will always have a similar type of operating profit margin year on year. So end of the day, I think they add a lot of value to the customers because it prevents the actual end customers from investing in manufacturing capacities. And these companies, because of economies of scale, are able to offer products at a much cheaper level. So when a new player comes in the market or existing players, when they're evaluating buy versus make, then eventually because of the cost factors, they go with a supplier like Dixon or Amber and buy the product from these companies rather than actually manufacturing themselves. And the opportunity is massive. So I think these are secular growth stories. They can grow at 15-20% easily on a compounded basis for the next 3 to 5 years or so. And that's what is, I think, keeping investors interested in these stocks.
So Dipan, State Bank of India or ITC or both? Which ones do you like? I mean, these are two classic names which have potential to surprise us.
State Bank of India. ITC still, not convinced about the growth of the tobacco business. End of the day, the volumes are in low single digit, and they really haven't been able to scale up the other businesses to the same level of profitability. And the non-tobacco businesses, the contribution remains pretty minuscule. So end of the day, ITC I would read as a tobacco company with all its legacy problems. And the stock has run up also significantly. So keeping the risk return profile in mind, it's one stock we'd like to avoid. But State Bank of India, I think we can look forward to exceptional numbers. These are absolute blue sky scenarios for the banking sector, where they're getting the best in terms of net interest income and net interest margins. And at the same time, the credit costs are pretty much contained. Banks like SBI and the PSU banks are getting a lot of money in also through recoveries, which is flowing into other income, which earlier they had written off, now they are writing back those recoveries. That's also giving a bump up to their profits. So valuation is also pretty reasonable. So I'd go with between the two stocks, I would go with SBI over ITC any day.
Rated sector, underrated sectors. At the current juncture, if you have to define one name or one company which is overrated and vice versa, which is underrated.
Is that question for me, Nitin?
That's right, Dipan.
I'm sorry, I didn't get the full question. You overrated, underrated in terms of a particular sector or on the whole? I mean,
Market, a company or a name which is overrated and similarly underrated.
across the spectrum of stocks, is it?
Yes.
I think in terms of overrated, I think a lot of the cement companies are very overrated, starting with the market leaders, Ultratech, APC, Ambuja. On the whole, the cement stocks, the way the valuation which they are trading at, and looking at their business model and the kind of competition, their inability to pass on cost increases, and the kind of expanded capacity which is going to come into play and maybe cause a glut in future. I would say that all cement companies to an extent are overrated. And the underrated stocks, I think, would be the engineering construction companies. We saw the numbers from last year in October. I was a bit disappointed with the operating profit margin, but there is here to engineering construction companies, the likes of, say, ITD Cementation or NCC, CSC Projects, KNR Construction. I think all of these are at a very interesting juncture. They have huge order book position in place. Valuations are reasonable, and a lot of the balance sheets of these companies has improved significantly in terms of lower debt. And there's a value unlocking opportunity if they are able to pass on some of their HAM projects onto InvIT or to external players. So I think that's a bit of an underrated sector, unnoticed also, if you consider the kind of visibility which is there in their order book position. And with stable input costs, I think you'll see expansion of margins for these companies as well.